Thomas Power, if the Fed is turning hawkish, can you reiterate the case for gold?
Greg, I don't think this hawkish statement from the Fed changes the long-term outlook for gold at all. In fact, the statement simply indicates that there are several members in favor of putting an end to QE at some point in 2013, and we've kind of already known the Fed has had this policy for quite some time. They've already indicated they will not tighten until unemployment reaches 6.5% or inflation expectations reach 2.5%. Keep in mind the hawkish statement by the Fed doesn't automatically mean they're going to come in and start selling what's on their balance sheet either. It just simply means they won't be making any new purchases. I think the real issue going forward should be the debt ceiling and the fact that we can't seem to agree on any spending cuts. And if Washington fails to come to an agreement by March 1st, we could be facing another possible downgrade of the nation's credit rating. And I think that the fear of this alone would be enough to drive up the price of gold.
All right, so that's the next catalyst. Let's talk about gold's trading so far. It's been rather tepid. So is it the same as stocks for gold? As goes January, so goes the year. Can we count on that with gold?
No question about it. I mean, we've been under heavy selling pressure over the last few weeks. I don't really think that this is a long-term indication of where gold will be at over the next 12 months. We saw a similar move at the end of 2011, ahead of the end of year. I think that was blamed on profit taking. And then we watched as buyers came back into the market and drove the price up during January, February, and March. I think we'll see a similar move this year with all the uncertainty surrounding the debt ceiling and with the taxes and fiscal cliff deal leading up to the end of the year. It's no surprise that we saw a lot of profit taking, a lot of investors sitting on the sidelines waiting for gold to find a bottom. With the added pressure from the Fed over the last week and the statements they made, it wouldn't surprise me to see gold go back and test 1629, possibly even 1600 below. And I would be looking for it to hold support at those levels. I would be looking at those levels as a possible buying opportunity. We really need a close above 1668, 1669 area to signal some bullish momentum. I'd look for resistance to come in right around the 200-day moving average, 1695. A close above 1715 would be a very good positive signal for that the bulls are in control. And I'm still looking for gold to reach 1800 by the middle of 2013.